in my rental properties, I house a lot of homeless people. I have a program called Homeless to Homeowners where I buy single family homes and I put homeless people into that, and hopefully then that they can figure it out. And there's a program they go through to eventually become homeowners, and I would let them buy the home that they're in. So I'm huge into helping the community. I think business, and especially with real estate, it's such an advantage because you can make money, but you can also make a difference.
All right. What's up, everybody? What's up, deal makers? Let me see. I'm going to be reclaimed the host. I have my assistant there. Will is going to be a little bit late today. He's running around town, and we're going to wait for him. And I'm excited. We are having a fantastic investor today, everyone. I think you're in for a treat. I think you're going to get a ton of value. This guy has a fantastic story. I met him through a great friend of mine by the name of Diego Corzo and Felipe Mejia. Some of you might be familiar with them. They run the Rat Race to Financial Independence Mastermind and group that they have going on. And I met him at one of the events that they had. And it's just been fantastic to get to know his story, what he's working on, especially because we are now transitioning or adding, better said, to our portfolio by our first multifamily acquisition this year in Arizona, in Phoenix. And so we selfishly like to get guests on that we're friends with and we met and we love and respect, but also that can help us a little bit and teach us some things. So again, you're in for a treat. So make sure that you're taking notes and you're asking questions. Will is going to come in a little bit, but in the meantime, as the people that have come to the show before, you know that I'm going to give an update, kind of what's going on, what we're seeing. It's some crazy times. I'm currently in LA, in Studio City, and it's been a heavy workload. I've been working nonstop with seeing my family, friends. It's been a roller coaster. I'm super excited though. We'll be jumping on very soon. We'll let people get logged in. How is everybody doing? Make sure that you're using the chat once everybody's in the webinar, and that way you can connect. Big reason why we even started this webinar was because it was in the middle of COVID. It was about 2 years ago. It's crazy to say that. I think this is our 90th or 89th episode. And we started it because we wanted to have something like this. We didn't see it happening, so we created it. And now it's kind of taken life on its own. It's helped us create an amazing community of deal makers on our Facebook group. And it's also helped us connect with a lot of you face to face. And it's also helped people get their first deal or help them get the information they needed to get their first deal or their next deal. So once again, type in your information, your Instagram, all that good stuff, and I'll go into my update. So, all right, guys, so we are starting to see some progress. We saw some delays. Some of our projects are either taking longer, or we are seeing that retail buyers are trying to renegotiate deals and trying to get huge price reductions. So some of our flips has fallen out of escrow, been a little bit frustrating. But to be honest, we've been spoiled for the last couple of years because it's really been going up. And so now we have to work deals a lot more. We need to work with buyers and things like that. So we signed loan docs on a couple of refinances, and we also signed loan docs this week for one of the flips that we have in Hawaii on the beautiful island, the big island in Hilo. So that one's getting to the finish line. Also, last week, I'm not sure if any of you saw it, but we attended an event in Orange County called Hybrid. There were some big hitters there. Thatch Wynn. We also saw Adrian Hernandez and Rick Ramirez. They hosted it. Fantastic guys. They put together an incredible event. We got to meet, just connect with a bunch of people. A lot of them were from Southern California. So that was cool. All right. So one of my big updates right now, everyone, and I've been talking about this, has been the habits, the healthy habits. I believe right now in these challenging times in a down market that you got to go back to basics. You got to go back to the fundamentals. And that to me is having solid habits, having solid routines. And so I've been on fire last, I think 3 weeks or so, doing the morning, evening routines with the reading, exercise. I think you can see some of my book collection back there. I have over 100 books here. And that's in LA. I have stuff in Mexico and also in Maui. But just staying on that mindset of growth, the mindset of I can get a little bit better. I can be a little bit more focused. journaling, all these things that will just keep you in that flow, keep you into that positive, mindset every single day is super important right now. I'm also doing that with my teammates, right? Where I am pretty much letting everybody know, hey, I want you to be at your best, and that I don't want you working 10, 12 hours a day. You need to rejuvenate, you need to reset. And so that's been, pretty cool. Also, I've been getting back into the LA flow of things. I haven't lived in LA full time for almost 2 years now. And so it's one of those things that I associate LA with work. When I'm here, it's nonstop. So I need to kind of get back into that flow of working, but also, like I just mentioned, rejuvenating, doing some self-care, going out to nature, and not being all about work, because it's so easy to get burnt out or just be in a negative mindset right now because of what's going on with the economy and the bad news and some of the things that you're seeing happening in the world, right? So I went to a housewarming party this weekend, and it was for a good friend that I met in Vegas, a lender, a very successful lender here in Southern California. I think I made about 30 contacts or so. Just a lot of hustlers, a lot of people that are in the lending, real estate, investor space here in Southern California. And although I've been remote for so long and I've built a lot of great relationships remotely, there's nothing like meeting people face to face. There was a couple of people that I hadn't met before that were some of my followers. So I always love running into people that, that we interact on social media and we meet for the first time. I know a lot of you, we've done that. So that was kind of cool. And then also I spent almost the entire Sunday with my family, with my mom and my dad. I went to church with my mom. She's so happy when I do that. I got to hang out with my dad and mom and go grab some lunch and just hang out, talk to my family, see what they're up to. And so that was really special. But that's pretty much it. I think we're going to see, if Will's going to come in right now, or we're just bringing David. Abby, can you help me out with this? Are we bringing in David, or is Will going to sign on? I know he's running a little bit behind, but we got some deal makers that want to start talking about some deals. All right, so while David's coming on, just so you guys know, David, he is a multifamily investor. He goes by the do-it-yourself real estate investor. He has over 200 doors, 426,000 square feet of commercial real estate. He's featured in a Bigger Pocket, so make sure you check out his episode 420. He's a full-time investor, deal finding machine. He buys a lot of deals from listing agents, and he's like a go-to multifamily investor in Chattanooga. What's up, David?
Hey, Alex, thanks for having me on.
Yeah,
Appreciate
brother.
it.
Yeah, brother. Like the beard.
Thank you.
Yeah. How's your day going?
It's going great. I've been on vacation and now I'm back at work, and I don't know, I like work. Like, I had enough vacation. I needed to be back at work.
Where did you go?
All over the world. Like, I've been on vacation for almost 8 months. So
yeah, you guys hear that? Wow, 8 months. Okay.
yeah, I was in Dominican Republic, Ecuador, Mexico, and then we did a bike trip across Europe. We did Germany, Austria, Slovakia, and Hungary.
Wow, man, that is a vacation. How were you able to manage everything remotely? Just a team, or what? I mean, high level. How did it go? A lot of fires that everybody else put out for you, or what happened?
Kind of on a team, but that I used to. I mean, this is kind of getting into my story, but I used to manage all my multifamily myself.
Mhm.
But then I hired a property management company so I could go do this, and then I've been kind of managing the property management company. Yeah, I mean, it's great because I was able to go do this, but no one takes care of your babies like you do. So it's a learning curve.
Yeah, I couldn't agree more. People don't understand. They think passive, and it's like there's no such thing as real passive. You're just right. And you still have to do asset management, right? And which is basically managing the manager. Oh, yeah. Well, we're definitely going to talk about that. As I mentioned earlier, I think Will has had some delays and just probably LA traffic, shocker, right? But let's talk a little bit about your story. People want to know how you guys started. So why don't we jump right in? I know your story, but the viewers don't. So tell us high level, how you got into real estate and where you're at today.
All right. So short story. I grew up in Africa, actually. My parents were missionaries. I'm American, but they moved me over there when I was a kid. And so I grew up over there. I came back to the States and went to college, and then I decided to go back to Africa to work as a hospital administrator. So I was in the Congo working as a hospital administrator, and I was like, I want financial freedom so I can go live anywhere in the world and do whatever I want and not worry about how much I'm getting paid. And so I looked up Bigger Pockets, started listening to episodes, and I was like, okay, let me buy a duplex. Let me buy a quadplex. So I just like saved up all my money, and partnered with my dad to buy a quadplex back in Chattanooga, which is where I
What
went
year
to
was that
college.
when you got started?
I got started in 2014, so 8 years ago, almost like beginning of August 8 years ago. So it's almost been exactly 8 years since I started. Um, and bigger pockets was a big thing for me too, because I was just listening and then buying and like just making up this idea, like I'm just going to get all this passive income, but we got to save up, down payment, yada yada yada. We did that. We got it up to 24 units in 3 years. And then I moved back to the States and I decided to become a full-time real estate investor. So, but because we only had 24 units, I was like, okay, I have to do everything myself. So I became the DIY guy. I'm managing it myself. I'm fixing stuff. I'm running around with my van, everything. Then over time, something magical happens when you're doing something full-time and it has your full focus, you just become so much more successful at it just because you're focused on it. And so it just continued to grow and grow and grow. And I got it up to 200 multifamily units. I had more. I sold some of them. I've been up to about 250 units before, and I sold a couple of them this last peak, just taking some chips off the table. And then multifamily got really expensive. I was like, let me look at commercial real estate. And so I just started learning about commercial retail properties and I started jumping into that. And so I just started growing that actually after COVID happened. Like when everyone was running away from commercial retail, I was like, okay, now's the time to jump into that. So that's what I've been doing. I also am very passionate about helping people. In my rental properties, I house a lot of homeless people. I have a program called Homeless to Homeowners where I buy single family homes and I put homeless people into that, and hopefully then that they can figure it out. And there's a program they go through to eventually become homeowners, and I would let them buy the home that they're in. So I'm huge into helping the community. I think business, and especially with real estate, it's such an advantage because you can make money, but you can also make a difference. So that's kind of the really short version, and we can dig into any of that and more as we talk.
One of the first things that I wrote down here, though, what you're saying is when you focus on something, and you said that you went full time, and when you were able to go full time, really, that's when things kind of took off, as I heard it. And I couldn't agree more, because I hear a lot of people that, and you can do it part-time, and sometimes people have great W-2s and they can, maybe don't take too much of their bandwidth, and they can do that. However, I have found that people that are all in, obsessed, full-time, focused, you're getting better results because you just are much more dialed in, and your level of focus is helping you get those results, like compound results, as I've seen. So what are the things, I guess that kind of leads me to the question, like, what are the things that you started to see that you were getting better at then by being full-time? And then how did that kind of start to compound the results that you were seeing?
So a couple of things. I got more confident in what I was doing, so I could take more risks that would be much more risky for someone else. That wasn't so much of a risk for me. For example, I was managing my own property, so I knew exactly how long it would take me to rent something. I knew exactly my costs. Like, I knew exactly what the rent would be. I had no doubt, because I'm doing it and I'm full-time in it, that my margin for error, like what the discrepancy is going to be, is very small. So I can go take much more bigger risks that people see as risky. Like, for example, I bought a 24 unit apartment complex where I only ever walked in 10 of them, did no due diligence, and we paid cash up front without seeing the leases, nothing, just like that. But like, that was a long process for me to get there. And I knew it was an amazing deal because I knew what it was worth and I knew what I could get it to. And I knew all these things, but I didn't have the contract to back it up. And I did it in a much more risky fashion. But because I was doing it full time, I had the confidence to do that. Also, it's just because you then run into more people that are doing it. Your network just grows automatically when you're doing it full time. Yeah. And that just leads to different opportunities. You network with this person and then they call you about this. They network with this person and they give you deals. Like, yeah.
Yeah. Well, again, I want to highlight something, because the reason we interview amazing people like David, everybody, is so that way we could take these golden nuggets and we could run with them. And I could not agree with that more, that what somebody else sees as risky, what someone else sees as, oh man, I can't believe they're doing that. You don't feel that way because you're in the game day in and day out, you see the numbers. So to you, it's a calculated risk. To you, you're more informed. You have the data you need to make the decisions. And so I find the same thing. People had asked me that a lot. Well, how are you able to flip houses in California and, you know, LA, you know, which is kind of considered an expensive market, and you live in Hawaii, you live in Mexico, like but I had been in all these neighborhoods, right, for years, driving around, looking at these houses, talking to agents. So when I trained my team, I was training them to replace me here. And so I could buy a house remotely because I know that neighborhood, I know my numbers, I know where I need to be at, I know what the rehab looks like on that. And so I don't really need to go walk and look at that house again for the, you know, 186th time. But people don't see that when they're outside looking in, like, oh, that's risky, that's risky. Well, that's because you're not in the game. So
right, you're not in the game, and you didn't put in the hard work that I put in for so long. Like, we've learned so much. We don't even realize how much we know and we've learned because we've been putting in the hard work a long time. You say about knowing properties, like, okay, I'm in the Congo, but I'm investing in properties in Chattanooga. How am I doing that? Well, when I graduated from college, there was no jobs around, and I took the only job I could, which was an insurance salesperson. And I would call people up and drive around and try to sell them insurance. But guess what? I drove all over Chattanooga, every single neighborhood. I knew them all. I got really good on the phone. So those skills, I kept them. I put in a lot of work to get those skills, but I kept them and they became useful in my real estate career afterwards.
Yeah. Have you ever got a question from someone, David, and then you had the answer and then you're like, how did I know that?
Exactly.
You're like, how did I know that? But it's just through this experience that you get that understanding that it's just those, I call it like that spidey sense, or just like, oh, okay, I got this. Like someone could tell me a zip code, size of a house, and what they're asking for, and I could immediately know like if it's even close for me to even spend another 5 seconds on it or not. And I'm sure you have scenarios just like that with rent. Like, okay, you got this unit, I can get it rented at this price. It's gonna cost me this much to rehab it. And so that's where the magic sauce happens. People don't realize that because they don't get past that first year, that second year. It just, once you get into that 4th, 5th, 6th year, it's pretty hard for you to like mess up. I mean, when you're focused, we also make mistakes, but
right.
Your level is raising, your knowledge, your experience, your network. That's another thing I don't want to overlook. As you said, I've never thought of it that way. When you're full time, you're going to be talking to more people, so then you're expanding your network faster and more. So then that way you can lean on that network for problems, for your contractors, for all these other things, and it helps you succeed because network is your net worth, as they say. So yeah,
exactly. And what people need to realize is they need to tell everyone what they're doing. It's easy when you're full-time in it, but even if you're not full-time in it, you can tell everyone, hey, this is what I do. And when I mean everyone, like, this is my goal. Like, don't be ashamed or scared of what people are going to judge your goal. Like, my goal is to buy, and I'll tell you right now, my goal for next year is to buy 100 million worth of retail, commercial retail. Like, that's my goal. And I'm telling, I've probably told 20 people already. I probably just set the goal like a week ago, but I've already told like 20 people because I want everyone to know that's David's goal and they can help me achieve it. Someone on this call, I would not be surprised at all if someone on this call is like, you know what? I have this commercial retail deal, David. You want to take a look at this? And I might buy it. Like, I have gotten from another kind of group like I did like this, actually for Diego on their, when I went and talked on theirs, literally one of their people brought me a duplex. I bought it, even though it wasn't that great of a deal, just kind of to like incentivize him for bringing me. And I was like, okay, it's a good enough deal. I'll buy it. It's not a home run, but I want to make sure he gets paid because he did the work to bring it to me. He brought me that duplex. That duplex connected me with another realtor who got me 50 other units plus a commercial building. And it's still going because now I have that relationship with that realtor.
Oh my God.
So I have no doubt that someone on here is going to help me achieve my goal.
Yeah,
so you need to tell people your goals.
Yes. Oh my God, this is so good. Let me unpack this real quick. So the goal, like, you have to be loud and proud. I don't want to keep relating it back to us, but I think it's more in the form of we're having this conversation so that people can understand the things that have worked for us. And, even though we're investors in 2 different states, 2 different backgrounds, similar reasons for success, right? That I told people once I figured out I wanted to buy a multifamily that I wanted to buy in Arizona, and then 6 months later, we're buying a multifamily property in Arizona, right? So you have to let people know what your goals are. Obviously, it has to be like realistic, or like, you are taking action towards making that happen. You can't just tell people, hey, I want a Ferrari, and they just want a Ferrari. Okay.
Right.
But also like you said, the relationships. I mean, you'll hear time and time again, but one relationship leads to another, that leads to another, leads to another. Somebody just posted on my Instagram that, hey, I made an introduction and that they've worked a nice partnership together, or they're working on deals together. I'm not seeing anything from that. But anytime I need anything from either of those two people in Arizona, they pick up my calls. They over the top, they're gonna help me as much as possible. And what is that worth? I could, hey man, where's my referral fees, or how much am I gonna get this situation? Dude, no, like, hey, you guys are better matched together. I can't help you out directly. I can't help you out directly, but it costs me nothing to make an introduction, right? Yeah. And so like these relationships that you develop and getting out there and putting yourself out there, you just never know where they'll blossom to or at what point. I've done deals with people that I met a year and a half ago, 2 years ago. And then finally the circumstances or the right deal came up where we're able to work together. So never, ever stop growing your relationship. And I know that's why you're doing this too, but not only to bring value, obviously, but you're expanding your reach. And let's talk a little bit, give some what I think are important right now, because a lot of people talk about just having someone else manage your property. You don't want to manage. It's like so easy to have a property management company in place. Let's talk a little bit more about that. Like, what are some of the tricks, some of the recommendations you have for managing your own property?
Okay, so I have managed, like I said, my own properties up to 250 units of my own. I also managed for another company. It was for a nonprofit, so I did at a discounted rate, but I also managed 250 units for them. So at one point, the most units I've managed was about 300 units at one time. I managed just me, myself. So it's definitely possible. People can do it. Like, it's not like you can't do it if you're managing it yourself. And I think it helps. Like, you learn so much from managing it yourself that information and that lessons is really invaluable. Even if you learn that you don't want to do it and you want to hand it off and you're not right for it, okay, that's fine. But like doing it in the beginning, one, it will get you more involved. So you'll meet more people, you'll be more involved, you'll be building your network. Mm-hmm. Two, you'll understand it a lot better, so that if you do hand it over to property management, you know what's going wrong or what's going right and what's true. Like, for example, like I'll have investors call me from out of state who are investing here, and they'll be like, hey, what's going on with the market there? Like, my property manager said it's kind of slow. I was like, I'm 100% full. What are you talking about? No, they haven't filled a unit for 3 months. I thought that was normal. I was like, no, that's not normal, right? Like, or like how much it costs to paint an apartment. Like, if you're not involved in it, like, because you're flipping and stuff, like you have a good idea, but like, if you're not involved, you have no idea. Perfect example. I handed over my property management to this new property management company, but I told them they have to use my vendors for certain things. So my AC vendor wasn't available, and they sent out another vendor, but they didn't ask me. And they're like, the unit needs to be replaced, and it's a simple mini split unit. Mm-hmm. And they were like, oh, he can do it for $4,000. I was like, no, call my guy. My guy comes in $1,800. And it's like, people think that just because they're professional property management that they're better. No, not necessarily. Like, you have to find, you can find those contacts yourself, and you can build them, and then you can have them. But if you are managing it yourself, a couple of tricks. One, list on Facebook Marketplace your vacancies. Literally, you have to wade through a lot of shit, but you can get so many eyeballs on your listings if you're on Facebook Marketplace. Awesome. Two, you got to find a way to screen your tenants. I use a property management software. It's all included. But screening tenants is really important. And three, though, is treat it like a customer service relationship. Like, if you have that rapport with your tenants, like, you can still be firm in your beliefs, but you can also pick up the phone, you can answer the text, you can be personable. And that goes a long ways into getting you like referral tenants, and just building your network, but also to keep your tenants. If you have that open communication and that relationship, like, hey, I'm serving my tenants as well, and not just like, oh, I want to be completely passive, I never want to talk to them. And honestly, it was kind of a shift for a lot of my tenants, because when I handed it over to a property management company, I had more people leave than I've ever had before. And I think it was because of a style difference, because a management company can't be as personable as I am, right?
Now, have you found, though, because there is that thought that if you, oh, I am the owner and they know I'm the owner, they're gonna try to grease me for money. They're gonna think I'm rich. How did you handle that? Because I'm sure you've heard
So
that.
man, if you're scared for people to know who you really are, I feel sorry for you. Like, you don't need to be scared about who you are. Just be the real you. Like, my tenants never think I'm super rich because they see the car I drive when I show up. And that's how poor people think they know how rich someone is the car they drive. And I drive an old beat up car, right? So all their cars are nicer than mine, right?
Yeah.
And I don't, and I'm a simple person. So it's never a thing like, I never had the thought like, I feel like they think I'm some rich asshole or anything like that. It's never been like that.
Yeah.
But why I want people to know who I am and what I do, I always want to be the owner. I'm not scared of the decisions I make. Like, I don't need to hide behind someone else for the decision. Like, I can make my decision and live by it. I mean, I was a hospital administrator in the Democratic Republic of Congo, which is an extremely difficult, corrupt area to work in. So I've had a lot of experience in having tough skin. But on the flip side of that, if people know who I am, then they can refer stuff to me. When they have a friend, they can be like, oh yeah, my landlord, he's a good guy. You should rent from him. Or they know someone who's selling something and they ask me if I want to buy it. Like, it's happened. Like, I've bought stuff from referrals from my tenants. And just out of the blue, I am now, we're going to sign the paperwork next week. I'm going to be a part owner of a primary care doctor office from one of my tenants.
Wow.
So my tenants, they knew me, connect with me. They came back and forth into my thing. They're professionals, but they came and asked me, they knew I had money, came and asked me for a loan. I said, well, I'd rather not give a loan, but I'd rather take equity. So now I just have another business, another income stream that's going to, grow.
Dude, this is gold, David. I don't want to overlook some of this. So earlier you said about the cost, right? They quoted you $4,000 for a mini split, and then your guy was able to do it $1,800. That doesn't like remind you guys of how important relationships are. I mean, they literally are worth thousands and thousands of dollars. We had the same thing recently with one of our flips in a little bit more of a remote area where we're usually spending about $4,000 or so to rehab a bathroom. And then I looked at the invoice, it was $8,000, but the bathroom had already been done. So I'm like, how the hell did this fall through the cracks? Like, this is double our normal rate. And long story short, we're not going to fire him or that, but now we're keeping a close eye on everything else he's doing, and we're just bringing them down. Now we know we have to negotiate with this guy on every single thing. There isn't as much labor out there. He has done a good job, but he was squeezing in those extra $3,000-$4,000 on one thing. And we look back and we're like, oh, we paid a lot on this and this. No, it's not happening anymore. So it's remarkable to me that how big a difference the cost could be. And like you said earlier, just because they're a property management company, you can't assume that they're negotiating every deal for you and they're on your behalf. You said it right when you started that even though you're gone 8 months, I'm sure not only did it cost you on the trip itself, but it probably cost you some revenue, probably cost you some additional expenses. Which are a little bit intangible there, or you can't quantify them as much as direct like this numbers, but that's an example. So make sure that you have your vendors, because our project managers also have their Rolodex. They have their lists of contacts and people they want to go to. Okay, we're going to go to this electrician first, and then this one, and then this one. Some other company might just pick whoever they want, easiest is available, not who's the best price and the best deal. So,
but you're able to catch that because you've done it, right? Because you've done it from the very beginning. You've built it up. Like if I, who know nothing about flips, wanted to just take over your business and be like, you know what, I just want to pay to get at the top and I get your business, I'm not going to know anything about it. It's not going to work. That's why you have to put in that work in the beginning. Like, you can't skip that hard work step in the beginning.
Yeah, definitely. Well, let's move on here. I think that the multifamily is something that everybody's really interested. We're obviously both in the space. I know you're also in the commercial retail. Not a lot of people are doing that. So do you want to talk a little about that? Why you got into that space, how that's going, some of the details, maybe some deals, because I think I'd only. Okay. Can you hear me?
Are you there?
Yeah.
Okay.
Commercial triple net retail. Let's talk about that a little bit.
Okay. So once again, this is just going to be a story about network, right? But and just helping people out. My sister wanted to get into the multifamily game. So I found her a 6-unit. This was back in, I don't know, it was like 3 or 4 years ago. And a 6-unit, and I went and did, it was in my area and I was going to manage it for her and everything. So I did everything for her. I found it. I found her lender. I found her insurance. I went and got it. I even was power of attorney and signed for her. Like I did every single thing for her just to get it, her this 6-unit. And when I go to closing, I meet the seller, who's another young guy. He's a little bit older than me, about my same age, but I just like start talking with him and connecting with him. And he was like, wait, you're not getting anything out of this? You're not making any money off of this? I was like, no, I'm just helping her out. He's like, no, man, you got to make some money. Like you gotta, be making money on this. Like, no, just helping her out. But then we exchanged contacts, and we kept in contact. And he happened to bring me this strip center that had a Planet Fitness gym, a CVS, a Subway, and a Pizza Hut in it, and a smoke shop. And I didn't know anything about commercial retail, but it was like a 9 cap and it looked like a great deal. So I was like, okay, I'll come in. So he had 1/3 of the deal, and he was supposed to bring in 2 partners, me as one and the other guy. The other guy backed out. So I ended up with 2/3 of the deal, and he ended up with 1/3. And this was we closed January 1st, 2019. So I'm like, okay, great. I have this commercial property. It's going to be great. It's a 9 cap. Then COVID hits, and Planet Fitness calls and says, we're not going to pay the rent. I'm like, oh shit, this is a problem. So then I call the bank, and the bank says, don't worry, you don't have to pay your mortgage for 3 months. I was like, okay, that works out. So the bank said, we don't have to pay mortgage for 3 months. Planet Fitness starts paying rent again, and everything's good. But I noticed that everyone else is scared of retail right now because of COVID. And so I just decided to start looking for retail and go full time into buying these commercial retails. Am I frozen, or is it just you?
No, I can hear you.
Okay.
Yeah.
Okay. So just want to make sure. So
yeah, I've been pinging Will, like, where you at? Where you at, man? My internet's a little bit choppy. It's like you're not here, and then if my internet's choppy, where you at? But I can hear you.
Okay. So anyway, so that's when I started focusing on commercial retail, and I put my phone number on our LLC that owns that strip mall. And so then all these other brokers started calling me and offering, because no one was buying because it was COVID. And that's what kind of gave me the opportunity to branch into commercial retail. I kind of just fell into it, but I'm so glad I did for a couple of reasons. It's triple net. And what triple net means is that the tenants pay or reimburse for essentially all the costs. So on that property, the tenants pay their rent, then they pay for the insurance on the property, then they pay for the taxes on the property, they pay for the property management on the property, which I do myself. So they pay me to manage my own property. And then they pay for any common area maintenance. And at the end of the year, we do a CAM reconciliation and do everything, but they're paying for everything. So my variation in my income is very small. It is what it is until someone moves out, right? They pay their rent. And then if they move out, like then you have a vacancy, and vacancies, that's the downside. Like vacancies can take longer to fill, but it's very steady once it's filled. Unlike multifamily, which I'll tell you, if you're getting into multifamily, be prepared, have reserves, because it's very up and down depending on what your costs are, depending on how your property manager's doing. Like you could be losing money for several months with multifamily. It happens. So that's kind of why I got into retail. And then I started seeing that it's very easy to buy bigger properties, less people involved. I can manage myself, hundreds of millions of square feet of commercial retail, no problem, because it's so, it takes no work. The people deposit the money. I do a little bit of accounting and do a CAM reconciliation at the end of the year. And if it's full, like that's it. On another downside, though, in comparison to multifamily, you don't get to raise the rent as often. So with multifamily, they see it as a hedge against inflation because you're always raising the rent to catch up. With retail, you're locked into your leases, which are longer term leases, and so your rents don't go up as much. So that is a downside to it. Yeah, I also think that the multifamily is great, but everyone wants to do it, so it's more crowded. The retail is less crowded of a space, so sometimes I can negotiate and it's just only me and the seller in the situation. No one else is negotiating, so I can get a better deal. Versus where multifamily, where you're probably negotiating against a lot of other parties in the deal. And does anyone, all right, you there? Guess people are popping on.
Yeah, sorry about that, man. I'm just this you know, if it can happen, it does. Murphy's Law, right?
Exactly.
Will is not available. My computer's had no problems the entire day.
And then
right now, and then my computer's not working all of a sudden. What the fuck? Anyways, but that's life. That's how it happens.
Yeah.
You gotta adjust. Nothing's gonna go according to plan. You know, your main tenant that you thought would never stop paying calls you and says, "Hey, we're not paying our rent."
Exactly.
But no, I was able to hear what you were saying. It's such an interesting space. Are you familiar with Matt Onofrio? He's kind of big in that space too.
No, I don't.
He's kind of big on the triple net space, and I've begun to really have interest because of the depreciation potential.
Oh,
and
man.
so
Dude,
do you want to talk a little bit about that?
So talk about like just also network, right? So the same guy that I did this deal with, he comes to me and says, "Hey, I have another deal, $6 million Class A office building." Okay, it's got a bank in it. It's got the DA's office in it. I mean, this thing is nice. It's got 2 elevators. It's like the Trump Towers of Cleveland, Tennessee, which is a small town. So, but for me, it's nice, right? So we buy this thing for $6 million, just me and him. The owner did a carryback note for $900,000. So we only had to bring in 150 each. So we put in 150 each. He put 150, I put 150. We control a $6 million asset that's spitting out. We get about $10,000 to $15,000 a month from it. And then we do a cost segregation strategy. We bring in the expert. He does the cost segregation. We get 1.6 million in bonus depreciation.
Wow.
He takes 800,000. I take 800,000. For those of you who don't know, that means I'll just say I made over 800,000 last year and paid 0 taxes on it because of that depreciation.
Yeah, I love it. We're getting
Like,
600,000 on our 18 units, so I feel you on that. Like,
it's amazing cheat code. Like, it's like blowing my mind. Like, I mean, it's, yeah. And then now there's always a positive and negative for everything, right? It always depends if what your situation is. So it's not just like a magic bullet, but you have to realize you're borrowing from future depreciation. So that building is going to give me less depreciation in the future. So it would mean I would have a higher tax burden in the future. But of course, if I keep buying and keep doing depreciations, I don't have to worry about that, right?
Yeah, exactly. No, I'm glad you're clarifying that, but you plan on making more money, right?
Yeah.
Exactly. So do I. So, just to me, I look at it more like, hey, I'm going to keep making more money. And, because I think it's that strategy of making a lot. First, get to a point where you're able to make a lot of money and you're making a lot of money. And then you need these tax strategies that so many people, the wealthy, do. And I found out about this strategy like 3 years ago, but I wasn't ready to understand it yet. And I wasn't making as much as I am now. So it wasn't as relevant.
Right.
So, but the minute I started to see like, wait, like how much are we going to have to pay in taxes? Whoa. And okay, we got to start buying something to help us with this. And that's when I went out for the search of the multifamily. But awesome. Is there anything else that we missed on that? Because I think that's very powerful, but you do need to be making the income for you to need to do something like that.
Right, exactly. And I did make the point, but it's like just telling everyone what you do. Like the other partner in the deal, he only has the 2 buildings, the 2 that I have with him. I've gone on and done many other buildings without him because my name is on the LLC and my phone number is there. So anytime someone looks up that property, so what brokers do, commercial brokers, when they're selling a property, they'll go look and see who owns something similar. So if anyone is selling a CVS in Tennessee, they will probably look me up and see that I own a CVS store and ask me if I want to buy it, right? Or if anyone has a property that has a gym in it, they'll look up, oh, David owns a property with a gym in it. Let's ask him if he wants to buy this. That's how brokers in the commercial retail space, like they prospect. So that's how I've gotten so many connections with other listing brokers that then turns into other deals just because my number's on there. So I like my information to be on there. Put my number out there. Let everyone know that I own commercial retail and I'm looking to buy. Don't need to hide behind an LLC, even though I have LLCs obviously for the companies, but I don't hide that I'm the owner of them.
Yeah, of course. Awesome. So I lost a little bit of my notes here, but this is a fantastic conversation. Is there any questions that maybe we got from anybody that we can answer? Okay. Wow, guys, we don't have any questions. We got this beast on the line and you have no questions. Okay, let's see. Well, so do you have
there's actually a question from Milton Flores in the Q&A. He says, what is the best way to get into multifamily from only dealing with single families?
I mean, it's the same thing. It's the same game. Like, that's when you realize, like, you just unit numbers don't matter. It's still all the same basic financials, whether you're buying a single family rental or $100 million shopping center. The basic financials of it is the same. Like, you want to make sure that it makes money, your cash flow, you're covered, your debt, like all of this is just the same. It's just on a bigger scale. So I don't think there needs to be a mental block to be like, oh, I only do single family. How can I get into multifamily? You just need to realize it's the same game and then like go look for something that's a good deal. Now, just because something's bigger doesn't mean it's a good deal. You still need to make sure it's a good deal. But just because something bigger, if it's a good deal, you should still do it. And
I've got a question. How did you learn to analyze commercial and or multifamily deals?
So multifamily was just kind of bigger pockets. I just listened and listened and listened. That's why it was such a big deal for me to get onto episode 420, because it was just kind of like full circle of my investment career of being able to get on that. Commercial retail, I just read one book and it said, read the leases. And so, I mean, it said other things, but that was the main point. That's the main thing that can get you in trouble with your retail properties, is if you don't understand what the tenant's lease says, because there'll be a lot of restrictions and stuff in there that you need to understand. But with everything I do, I'm really hands-on. I just study it and do it. And I learn by doing it. And I think, yeah, if you just jump. Oh, I see a question here that said, missed the first few minutes. How do you come up with a down payment for all these commercial and multifamily? So in the beginning, I was doing it the hard way, people. Like, and I recommend people do this. Like, you need to sacrifice in the beginning. Like, I was a family of, I had 2 kids at the time. I was living in the Congo. I was making $54,000 a year, and I was saving $34,000 of that to invest in real estate. Like, I was living off of nothing for years to save up for these down payments, right? So that's how I did it in the beginning, is I just sacrificed and saved up and bought a property. Sacrificed, saved up, bought a property. Now, as you grow and you have experience, then you can use different strategies. Like now, as I'm going to get commercial properties, I don't have to put my own money into it because I have experience, I have a track record, I have connections, I have network. I go put the property under contract, say I'm going to buy it, get a loan from the bank, and then I go raise the down payment from the other investors. So the basic syndication model.
Okay, I have a question regarding, the seller carryback. So the primary lender knows.
Yeah, they do. The bank knows.
Wow.
Yeah, you just never know. Like, we think there's these hard and fast rules, but sometimes it's just talking to enough lenders, finding the right one who wants to do the deal. Yeah, that lender, they knew about it. It was not written in, but it was under the assumption that we would probably get that paid off within a year, but we're only paying 4% interest on it. So why would we pay it off in a year? Yeah. Right.
And so we have a couple more questions here. Paul, somebody that works with us very closely and is also an avid multifamily investor, asked, for all these commercial properties, do you have a great relationship with a small local bank? If not, how do you get funding for these larger deals?
Yes, I have a local credit union that I use a lot. But not just one. Like, never just have like a good relationship with one bank. If you're going to do this, you need to have as good relationships you can, as many banks as you can, because banks fill up their buckets and they do different things at different times, and every situation is different. So I just tried to grow that network as well. Like, I have a couple of mortgage brokers I work with. I have a local banks, local credit unions. But yes, I am actively building those relationships.
Cool. I think another question here is for me. It says, Alex, how did you decide to go into the investment side, and what was the first thing you did to get started? I decided in my head years ago when I saw a lot of investors in Southern California making a killing during the recession, flipping houses, but I didn't get started right away. But what really pushed me over the edge was listening to Bigger Pockets, like 2016 or so. I was doing Airbnb arbitrage. I was like, man, I think I could be a great investor. I think I'd be a great house flipper and then keep properties that I want to keep and flip the ones that I don't. And so I went to go work for another investor, and that was in 2017, and kind of the rest is history. And so I just got a job basically as a salesperson for an investor, well, acquisitions, but it's really a sales role, right? And then next question, how do you tell tenants to clean up dog poop? I am house hacking and live there too, Roshan. So I guess, what are the procedures with having tenants clean up dog shit?
You just tell them. Yeah.
Yeah. All right. That's exactly what I'm looking doing. Make over 100,000 a year, have 80,000 saved. What do you suggest I start in multifamily?
Okay. Should you do multifamily or, I mean, here's the thing. Multifamily is, it appears to be, and probably is, less risky in a sense, because there's not enough housing in the country. Even if we hit a major recession, people are still going to rent from you as long as you have, B, C class properties. They're not going to just leave. And even in a recession, the rents normally don't even go down. Maybe they dip a little bit. Your values will crash, but they don't, don't have those issues. So for those reasons, it's safer and people understand it more. So it's easier to raise money around it. It's easier to get financing for multifamily. There's all sorts of financing available. It's more popular, so it's easier. The flip side is the returns now have been squeezed. Unless you get a really good deal, it's difficult to get, high cash on cash returns. But it depends what your goal is, right? If your goal is like, I just want to have this and I want them to appreciate over time, and I'm not worried about cash flow right now because I have my job, maybe that's the best route to go. Commercial is a little bit more difficult to do, but at least right now, cap rates, let me just explain cap rates, because there's probably some new people in here don't understand cap rates.
Yeah.
So you have the income that the property generates, not including the debt. That's the net operating income. Okay. So if the property makes 100,000 a year, not including your debt payment, that's your NOI. After all expenses, except for big expenses in your debt. Then you have a cap rate, which is what if someone were to buy that property for cash, what rate of return would they get on that property? So if someone was going to sell that property at a 7 cap, it means the person who was buying it could expect a 7% return on the money they invested into that property. Okay. If it's a 5 cap, if they buy it all cash without financing, they can expect a 5% return. So commercial properties are sold heavily based off of cap rates that are in that market for that asset class, whether that's multifamily or retail or whatever. So right now there's a difference in great markets. Right now, your multifamily cap rates might be at 3% or 4%, depending on your market. In that same exact market, your commercial cap rates will be at 5 or 6%. The market's exactly the same. It's just the asset class is different. So right now there's a spread where you can get stuff that generate a higher return if it's retail versus multifamily. Now there's risk and everything like that, so it's kind of adjusted, but the way I see it is the higher cap rate, I have more room for things to go bad. If I have something at a 9 cap, well, if the property devalues to a 10 cap or an 11 cap, it's fine. I lost some value, but I'm still good. Yeah. If you buy something at a 3 cap and it devalues to a 4 cap, you're in trouble. That's a huge reduction in value. Yeah. If I was I think if I was in LA, I'm gonna tell you, if I was in LA, I would find the cheapest commercial properties in big areas, like heavily trafficked areas. I bet you could still get some good returns in LA on a commercial retail. And there's something that's coming out, and I'll let the secret out here, where you can put 5G phone towers on your buildings. and you can get paid by the phone companies every time they ping your tower. So I would buy a crappy, small commercial building in downtown LA or closest to whatever highest traffic I could
I'm
boot.
writing this down.
Then you go to my Instagram page and click on my link, and you look at 5G cell towers, how to put it on your roof. I would sign up with those guys, and they will tell you how much income you could generate off of the roof just from the cell phone. And it's unbelievable. I have a property. Now, this is new technology because it just became like whatever. They just deregulated all of it last year. So this is a new technology, but there's a startup that's doing this. And they did a survey on all my properties telling me how much I can generate from cell phone traffic. On one of my properties, $800,000 a year.
What?
With a $200,000 investment.
Oh, you got Paul's
Profit.
attention. I know you got Paul's attention here. Now let me ask you this. Paul had a question on that too. Well, I don't know. That's mind blowing right there, man.
It's crazy. Like, no, so I haven't done it yet, but the thing is, I don't have to, you don't pay the 200,000 until you have the contract, a 10-year contract with the cell phone provider. So they gave me the estimate. Now they take that information to the cell phone providers and get them to sign a contract. They say it's going to take like 6 or 8 months. So I don't have one signed yet. But then once they do, then I put up the 200,000, put the towers up, and just start making that money.
Oh man, I love it. Now, how is that? There's something to do with the lender? Like, do you have to tell the lender that you have a property on that, that you have the property with, or is that like?
I mean, I own the property. I can put what I want on the roof. It's not it's literally, it's like a device that's like 2 feet tall, and it sits on top of a tripod on top of your roof. They put a big tripod on top of the roof, 2 feet tall. Like, it doesn't interfere with anything. And they put 2 of those on your building. And then everyone who's zooming by, pinging your thing is just giving you like whatever, 2 cents a ping, and you're just raking in the money.
Man, that's awesome. Hey, look, keep me posted on that. Actually, I'm gonna follow up with you about that, how that's going. And at the same time, I'm gonna look into the commercial real estate stuff. Now, Paul had a great question. So, being that you were just able to leave for 8 months, what does your team look like right now? What's the makeup of it? And what does everybody do? Just give us an idea. You're operating at a really high level. So what is your, the group that you're working with look like?
I'm sorry, say that question again.
Yeah, so what does your team look like? You're able to leave for 8 months. What does that look like?
So my team is, I have 2 maintenance people who do my turns on the apartments and some maintenance calls, even though I handed over the property management company, but I kept my maintenance people, right, to save costs. And then I have a part-time college student who is my assistant, and that's it. That's the only people who are like actually on my team. And it's crazy what you can accomplish with such a small team. And I have a small little office that I sit in a building that I own, and then I sublease, I rent from myself. And then I also subleased, it's like a 3-room office. I subleased one of the rooms of the office to another investor. So like, own the property, I rent from myself, and then I subleased from myself to another investor. But it's a small operation. I'm obsessed with, I'm on the wrong end. I'm kind of on a, don't take it as a good example necessarily, because I'm obviously on the bad end of, I should probably hire more people. But I like being small. I like being efficient. I like not having overhead. And so I can go for a long time. I don't need to like feed the beast or whatever. Like, I can live off of what I have. I don't have to like make sure I have all these things going on to pay all these employees. And, it becomes a life of its own if you build an organization so big as you're trying to scale. I rather grow at my pace and add on slowly.
Yeah, but that's not really a huge team though either.
Yeah, no, I have a small team.
And for the portfolio that you own and have, so it's great. So I guess the curious part is, this number, right? This passive number. Like, so what is your? I see you posted recently about getting a certain amount of like your goals that you had a couple years ago. So
Right.
How much are you in passive income at now?
How much am I in passive income right now?
Mm-hmm.
Just a little over $1 million.
Wow. In 8 years. In 8 years.
Yeah.
Wow,
Yeah.
that's incredible, David.
Yeah,
Wow.
but like, it takes goals. Like, I'm working on writing down like in the goal and like how to achieve it. Like, I'm working on this. My 100 million. I'm gonna
A
give
100 million. So
I'm gonna
100
give-
million real estate, or what's the goal?
yeah, 100 million in real
Remember,
estate.
state, we talked about it earlier. We're gonna state it. Well, what's the goal?
Yeah. So I mean, I have lots of goals. I have pages of goals that I'm working on, but the main one that's all centered around is I want to buy 100 million worth of real estate. That will give me, just knowing how it works, if I buy 100 million worth of real estate, that will give me another $10 million of net worth, and it will give me another about $1 million of passive a year.
Wow, that's incredible, man.
And five-year goal is to get to $500 million. So in 5 years, I'm gonna be at 500 million, $500 million.
I bet you're gonna exceed that goal.
I will. I mean, I put it on my magic spreadsheet where I write all my goals down. I'm telling you, when you write your goals down, I put it as a 5-year goal. It'll be done in like 2 years, and I'll have to do another 5-year goal. But that's life.
Yeah. Oh man, I love it. I love it.
Well, but here's the thing. I know this is big levels for some people, and it's tiny levels for other, right? Like I'm a tiny fish in the commercial real estate game, and some people think I'm like really big because you're just starting out. But it doesn't really matter, because you have to do what you're doing at your level. That's where you put in the hard work, and the other stuff just comes and it just compounds afterwards. So it's not really impressive that I'm going to do something that's just compounding off of that. Like what I'm doing now is not so impressive. It's more about the hard work that you put in the beginning that leads to this compounding. That is actually the more impressive part.
And I bet you're super proud of that stuff. Like all the times you're grinding, like you just said, with the car that you drive, or all the sacrifices that you made. I know when I think about like my journey to where I'm at now, I'm just like you. I'm a really small fish. Some people think I'm big in some rooms. Other rooms, I'm by far the smallest investor there. But it's almost like nostalgic a little bit to go back and think a little bit of all the shit we went through to get at least to this level. And I mean, all the houses that I had to look at, all the conversations I had, all the rejections I had to face, all that. It's like I wouldn't be who I am today without all that, right? So, exactly. I mean, I really enjoyed this call. Will missed it, but I'm sure he had stuff. And a lot of people do end up watching the replay. Like we literally have 20, 30 hours of, we track the replays on our YouTube channel. So this will be up for the people that missed it. I think because I'm on my phone, it's gonna be a little bit difficult to add people in. But what did you want to leave people with? If you had anything to say, just to kind of, what are your parting words, David? We really appreciate your time. This has been magical, man. I really appreciate it.
Thank you. Well, I just want to say, I have my Instagram account, DIY_landlord. If you have any questions, like specific questions, not just like, what do I need to do in life? Like, no, like specific questions I can help you with, please message me on there. I do my best to answer anyone who messages me on Instagram, so I can help you out there. And please, if you haven't already, write down your goals and start telling people what they are.
Awesome. And I have someone to introduce you, David. Thank you so much. And it's funny, I forgot that you were in Chattanooga, and I just paid off a private lender in Seattle that wants to invest in small multifamily in Chattanooga. And I was still telling her, like, damn, I got to do a better job of organizing my contacts on my network. So if like, hey, someone wants a contact in Chattanooga, okay, I got 5 people. Here are the 5 people. I'll introduce you to them. And then now we're interviewing you, and you're from Chattanooga. So Deborah is her name. She's lent us on a property. She's a fantastic lady. I met her through doing these webinars, and we just paid her off, and she wants to invest with her son out there. So I'll make that introduction.
All right.
But, hey, all you deal makers, reach out to David if you have any questions. His Instagram is in the chat. But again, like he said, specific questions. I feel the same thing. When you're like, how do I get started? Or you're not putting enough work yet, man. Go ask me, go make 100 offers, and then ask me questions after that. They'll be much more specific. So thank you, David. Have a fantastic day and appreciate your time. Let's go.
All right. Thanks, Alex. Take care.